Good afternoon, this is Bob Iacchino coming to you from the CME Group trading floor in Chicago. Talking metals, let's talk copper today. Copper was up almost 0.75% on its high, fell a little bit in toward the end of the day, but really not much. Going up again on its highs right near $3.25 on the COMEX copper contract. Since the low of 3.026, that happened around February 12th or so, 6 of the last days have been up. So since that low has been made, it's been essentially straight up, save for a couple of small down days. This is the second largest up day that we've seen in copper in the month of February. Part of that being the central banks activity that we saw over the last day and a half. We got the release of both the ECB and the Fed minutes, and both of them pointed to stronger economic growth. So you can look at that as being global economic growth. It's been really quiet out of China with their Lunar New Year going on this week, but with the ECB and the US and their generally dovish central banks expressing a desire to raise rates here in the US and expressing dissent on the ECB side of things in terms of whether or not they're going to communicate to the market that they need to slow their quantitative easing. That really put a bid to the economic growth globally, to that story, putting a little bit more of a bid to copper. We do have dollar a little bit weaker as well today, even though the Fed rather was a little bit more aggressive on where they think the economy and inflation is going. We've had a couple of Fed speakers today kind of balance that out. So the dollar is weaker, also putting a little bit of a bid into copper. On top of that, we have an interesting twist with copper stockpiles. Copper stockpiles in landlocked Arizona and Utah, which is a storage facility, it's a COMEX storage facility in both locations, has risen dramatically. And part of the reason is they're landlocked. So when you price out copper, you're pricing it out and you're including transportation costs to get it to a seaport and get it shipped to wherever it has to go. But the cost of transportation has gone up more than 10% this year. Therefore, the cost of the copper itself has not risen enough yet for those particular producers of the copper to ship it out of those warehouses to make up for those increased transportation costs. So they're actually going to stay in inventory until the prices rise, artificially taking some supply out of the secondary market for the base metal. So the increased inventories we're seeing in these landlocked zones is actually causing copper prices to rise because that copper's not hitting the market. So again, finishing the day closer to about 323, which is a little bit more than up 0.5%. This is Bob Iacchino talking copper futures from the CME Group trading floor in Chicago.